Hi, welcome to my channel. So today let's talk about how you or anyone else can invest in real estate without any form of down payment or mortgages. Or even if money isn't an issue for you, why this may still be a smart move as it removes the hassle of you managing your tenants or properties. So the instrument that allows us to achieve this is through public traded REITs. Now what is REITs? REIT stands for Real Estate Investment Trust. In the simplest form, you can think about a public traded REIT as a public traded real estate company. These public traded REITs all have their own ticker symbol, just like any other public traded company. So the way that you purchase and sell these public traded REITs is just like how you would buy and sell any other stock. Now, there's a variety of these public traded REITs or these real estate companies, and they all have their own specialized field. Some focuses on rental apartments or rental condo. Some focuses more on offices. Some focus more on shopping malls. Some focus more on the hospital or the healthcare sector. Some are in the hospitality like hotel or even casinos. Some are into land that's used for industrial use or energy. Some are a combination of whatever that I just described above. The way that these REITs earn their income is very similar to what you would get if you own a physical property. Basically, these REITs they collect rent on a monthly basis, just like how you would collect rent from your tenant. Now these REITs they also do modification development on the properties they have, or they buy land and develop on those. It's the same as if you upgrade, you furnish, or you buy a new land and then build your own houses. Now these REITs they pass on their earnings through the form of dividend to you. Now some REITs make the dividend payment on a monthly basis actually. So that's really an equivalent of your monthly rental income. So now let's compare what are some benefits of these public traded REITs versus physical property. So first, one of the main benefit of these REITs is that there's no requirement on how much fund you have. You don't need down payment, you don't need mortgages. Even if you only just have $100, you can still invest in REITs and reap the rewards when the overall housing market rises or the rent price rises. Okay, so let's say you have enough money for down payment and you can get mortgage easily. What are some other benefits of REITs? So second point that we're going to get into is real passive income. Say that you go out there and then you buy a condo or apartment or a house for rent. The moment you become a landlord, you are also working now for the house and the bank that lends you the mortgages. Why? Because the renter they don't just appear out of nowhere, right? You have to put up advertisement, you have to post your information somewhere for them to find you. And let's say if you're in a very populated city in a good location and your unit is really competitive on the market, then very easily you're going to get a lot of people requesting to rent your unit, and that's good. But then now it's not done yet. You now need to go through all of these applicants and filter out and find and hopefully find the one that is not going to cause you trouble down the road. While this doesn't happen frequently, in fact, it's probably quite rare, but occasionally we do see people get into rental conflicts, rental issues, and then it goes all the way to court. Not only this is going to cost you money, time, but then it's probably just a drain of energy and effort. And of course, this really depends on the location that you're in, like the local rental laws that have. Some places the rental law are favoring more towards the landlord, but some places are favoring more towards the renter. Also, if the property that you bought isn't brand new, then it's likely that once in a while you will have like an appliance or something that needs to get repaired or replaced. As a landlord, that's a service that you need to provide to your renter. Of course, you can hire someone specialized in property management to take care of all of these for you. But hey, that's an extra cost right there, and it's going to lower your overall annual return. And you need to take that into consideration. Now, by investing through REITs, however, you have this real estate company, people who specialize in rental and in property development. They're going to take care of everything for you. There's nothing you need to worry about on a daily basis. You don't need to worry about finding the right tenant. You don't need to worry about tenant giving you a call complaining or tenant not making the payment on time or something goes wrong with your property because the real estate company, is going to take care of everything for you. You no longer have to worry about your rental property when, let's say, you move to a different city or when you take a really long vacation abroad, knowing that everything's taken care of for you. Okay, the third benefit is risk diversification. Now, the risk diversification I'm talking about here might be a little bit different than what people usually understand. Most people think that the stock market are more volatile than physical property, therefore it's a higher risk. And that is true. But today we're talking about REITs, not just any ordinary stock. Normally, the stock price for REITs are a lot less volatile compared to the general stock market. And the reason is because the asset for REITs are actual physical properties. They are physical land and those buildings that you can actually see. And their operations are a lot simpler. Basically, their income are a lot simpler compared to the other companies and more foreseeable because basically the majority of their income are the monthly rents that they collect and they don't vary too much on a month to month basis. If you're really rich and you can own multiple physical property at the same time, then yeah, you have diversified your risk. However, if your money is only enough to afford one down payment for one property, and the amount of mortgage that you're going to borrow for that property is multiple times more than all of the assets you have, then essentially you're putting all the eggs you have plus the eggs that you borrow from the bank all into one basket. And if, just if, you ended up with a terrible tenant, or if the unit that you bought isn't brand new and there's something wrong with the unit that you didn't catch when you bought the unit and problem arise later on, then that's going to be a huge headache for you. However, by investing in REITs, because REITs owns hundreds, thousands, ten thousands of units across the cities or countries, and therefore your investment isn't going to get derailed by just a single tenant or a single building or even a single city going into trouble. So therefore, when you don't have a large fund, then investing in public traded REITs is actually lower risk. Okay, so the fourth benefit is low cost and high efficient trading. For whatever reason you wanted to get rid of the physical property that you have today, whether you want to cash out or switch a unit, you need at least a couple weeks to a couple of months. In addition, the commission fee that you pay to the real estate agents are quite high, well, depending on the location that you are. So it could very well be that if you didn't make enough profit on this property, then it might be that you're just working for free for this real estate agent and the bank. However, with these REITs, all you need is just a couple seconds and let's say probably at most a $10 brokerage fee for you to finish this transaction. The fifth benefit is the lower cost of operation and the potential of growth. We all know that when we buy things, we get a discount based on the quantity that we get. The more you buy, the cheaper it gets. So same thing with property maintenance, property development. When these REITs, these real estate company does upgrades for their units, they do it in the hundreds, the thousands, tens thousands of units at once. On a per unit basis, it's going to cost them a lot less than you if you would be doing the same for the one or two units that you have. In addition, we know that the fastest way to increase property value is through redevelopment. And that's a complicated process, not to mention very energy consuming and needs really specialized people to do it well. And that's what these real estate companies are there for. They have really talented people with years of expertise on this subject. In addition, with the movement of government now focusing more on rental rights and affordability, there's more and more places now capping the annual rent increase allowance for the landlord. At least the city that I live in, the landlord are only allowed with a roughly 1% of annual increase. But for these REITs, because a lot of their properties are commercial properties, it's really based on the market rather than government. And therefore these REITs are more likely to raise their rental rate more than you would be capable of. The sixth benefit is variety of options. For most people, if we want to invest in physical properties, most likely it's probably just a condo unit or an apartment unit. Commercial units are usually out of reach. However, with REITs, you can become the landlord of hospitals. You can become the landlord of industrial sites. You can become the landlord of casinos, of hotels, of basically a lot of different land. So there's options for you, and you can invest in properties that's at a different city, that's even at a different country. The seventh benefit is tax benefit. And this obviously it also depended on the location that you're at and the local tax law for you. But in Canada, because these REITs pay the rental income in the form of dividend to investors like us, and dividends have a lower tax rate than rental income because rental income are treated as regular income. Sure, even though there's some form of deduction that you can utilize to deduct your rental income, but overall, dividend will still have a lower tax rate. In addition, if you utilize your tax-free saving account or your retirement saving account to invest in these REITs, then you could actually receive all of these rental income as dividends and not pay a dime in tax. And the eighth benefit is you can continue to reinvest the rental income that you get from REITs back into the REITs, right? So if you collect your monthly rent from your physical property, what could you do with these rents? Probably not much because I don't think that's going to be enough for you to purchase the next unit, right? That continue to make you money. But with the dividend that you receive from these REITs through DRIP, dividend reinvestment plan, you could continue and automatically at an ongoing basis continue to purchase these REITs unit. So every time you get a dividend payment, it's going to be a little bit more than what you receive the next time. For REITs that paid on a monthly basis, then basically you're going to see a dividend increase every single month. Okay, now after talking about the benefits for owning REITs versus physical asset, let's get into what are the risks of owning REITs. Now, before we head there, if you haven't done so already, please help me out by clicking the like button as well as subscribe to the channel. Later on, I'll also introduce some REITs that make monthly dividend payment that I think are well worth your consideration. So the risk in investing in REITs is actually just like investing in everything else. You need to find a good REIT, basically a good real estate company. It needs to have good assets. You need to look at its history, its record, and the future where this company is going, its strategy. And this is no different than you purchase a physical property of your own, right? You need to find a good location that has potential. You need to pick a unit that isn't overpriced. You need to be able to filter and find a good tenant. Some may argue that by owning physical property, you can take advantage of the current low mortgage rate and leverage that. So leveraging has both sides to it. When the market is well, yes, leveraging can make you earn your money a lot faster. But when the market is in the downturn trend, then leveraging is going to kill you much faster. Regarding the low market rate though, while you can enjoy that, same as those real estate companies, they can also enjoy the current low mortgage rate from the bank. The only difference is when you buy a physical property, you are the one that's borrowing the money. That means potentially you could be losing more than what you own. However, by investing in these REITs, they are the one doing the leverage. So in the worst case scenario, which is very, very unlikely to happen on a well-run REITs, is that you lose whatever that you invest, but no more than that. So what's your thought about investing in REITs versus investing in physical property? Feel free to leave a comment or question below. At the end though, of course, not one is definitely better than the other. You just need to find one that fits your need. And of course, you could also own some REITs and some physical property. It's not a black and white choice. In my next few videos, I'll share with you some REITs that makes monthly dividend payment that I think are well worth considering. If you don't want to miss out, make sure you click the subscribe button and help me out by clicking the like button as well. Thanks for watching. I'll see you next time. Bye bye.